tonight's theme is reversal patterns, and I was telling Pico that I put a cheat sheet in the tools vault here with the main reversal patterns, and we refer to them as M's or W's. But the thing is, they're not only M's and W's. They might be different shapes. I'll open it here for you guys to see, because I want you to notice the slight differences between them. When we're trading these in hindsight, can you guys see this cheat sheet as I opened it?
No, we still see trading view.
You still see I don't know if I can. Let me see if I can share. Do you know what? Yes. So I'll stop, change window, and I will. Yes, perfect. Just remind me to change. Yes, now you see it.
Yeah, we see it.
Super. So the ones that are top are the double top, the head and shoulders, the rising wedge, are reversal patterns when the swing has been going upwards, when the trend has been rising, going up. When we have that structure at the top, that means we're going to reverse downwards. And generally we go downwards again in levels. If there were 3 levels up, we're going to go 3 levels down. Now there are three such patterns. The first one is the double top, which is a clear rejection of the peak. Now this double top is not always identical. So the two peaks are not always identical. The first one can be lower, the second one can be higher. Generally, if that happens, generally, not all the time, there is another, we transition to a head and shoulders, there would be a third top that is slightly lower than the previous one, than the second one. And the rising wedge is more of a higher high situation, higher high, higher low, and it's a devious one. Because what does this one look like to you when you look at it?
A bull flag?
Exactly. Was that JD?
Yeah, that was me.
Super. That looks like a bull flag. And I remember BFAM last week asking me, doesn't this look like a bull flag? And she asked it right before it started reversing. It looks like a bull flag, JD. That's why it's so tricky to trade, because you see it and you go in thinking it's gonna go up. And the reason why they do that is, again, psychological. You see the higher peaks here going higher, higher, higher. You see the lows going higher, higher, higher. And normally, like, your brain, your psychology tells you, oh, prices are going up. I mustn't miss that. I have to go in. I have to go long. So while the double top and the head and shoulders show a clearer rejection, the rising wedge is the one that catches us out. And I remember I used to be a pattern trader. Before I started using the ARC, I would trade patterns. I would trade channels and I would trade patterns. And these would be the most common patterns that I would trade. And the rising wedge would be the one that I stopped trading, because it would catch me, and I would get caught in these reversals. So it would work for me while, for instance, let me see, I'll show you when we do the charts. It would work for me when it was a bull flag, part of the steps up. So when it was actually part of the consolidation, but then as the 3 steps up were complete, then it would reverse and I would lose. I wouldn't DCA as a pattern trader. That was my mistake for risk management. I wouldn't use a stop loss either. So let's say I would put €1,000 or dollars in. I would make profits 2 or 3 times, and then I would get caught once or twice. So I would still be in profit, but the amount of money I was losing and the amount of times I was caught was a lot greater than when I actually started using the ARC, when I actually started using the DCA for risk management, and then when I started following the 3 steps up. So these 3 things were the elements that allowed me to follow the trades more closely, to go with the market and not be caught. And I realized patterns, they could be traded very well. Like if you are an intraday trader, if you like to do your trades on the 15 minutes during the day, you do 1 trade and that's it. Great, that works great. But just make sure you layer the other strategies as well. And we'll be discussing how to trade these reversals at the end.
May I ask you really quick?
Of course.
And maybe you already went over this, but what the biggest difference is between a rising wedge and a bull flag?
The direction that they go into. Now, let me see if I can, I'll change the window here to show you the difference. Because they look the same. That is a brilliant question. They look absolutely the same. Let me see.
So is it like you're basically seeing where it's happening within the arc to determine
Yes,
Okay.
JD,
Yeah.
that is it. Let me see. I'll show you that because the first part of the training is what are reversal patterns. So that's why I wanted to show you all of them. Now, you will see my screen now. Can you see it now? The chart.
Yeah. Yeah.
Very good. So let's say, where is it? Let me put this on the 1 hour because we'll see it clearly. Okay, perfect. Look at this. Look at this. We're actually gonna look at this pattern here. So if we look at this first swing up, well, this is a bull. What's the name? Pennant, because it goes a little bit like this. But let's say it were like this, because it's the same effect. So in this case, brilliant. The first step up from, let's see here. Let me see. Good. We had the 3 steps down. Here is the double top. Here is the first drop, and here is the first step up. So you see here, JD, here, this part is consolidation. Lovely consolidation. We take this technical target and we put it here. Brilliant. It reached it to perfection. And then if we actually take the same, well, these ones are not, maybe this is not the same because it doesn't have this, let me find, here. I wanted to find higher highs and higher lows. There they are. I knew they were here. Okay. Sorry, I'm gonna change now. So here in this breakout, flow. First step up, lovely bull flag. Second step up, again, a lovely bull flag. Third step up, do we have a bull? Yes, very good, perfect. We don't have a bull flag here, but I'll show you a bull flag here. So we did this drop and then we started coming up, and here is where people would be like, oh, look, a third bull flag, higher highs and higher lows. Can you see it?
Yeah, definitely.
So you see how the first and the second bull flag, they were brilliant for continuation. So the first one initiated the movement up. The second one, brilliant continuation. Third one had a nice correction. So again, people here would go, if you're counting Elliott waves, for instance, you go 1, 2, 3, 4, and then you go, yes, we're going for 5 to the moon. We're going to hit $1. No. If you went long in here, or even here, if you went long in here, let's say you could still see the rejection. If you keep a cool head on and you're like, okay, gonna see the rejection here, gonna see the start of this M formation, brilliant. But the same bull, that's why I said the rising wedges, especially when they're disguised as bull flags or bear flags for the opposite, we need to know where they are in the swing. And the 1 hour swings are actually very nice to see and to observe, because you get to see more of them over the month. So for a 4 hour swing, maybe you would need a whole month to see the play out of one. But for the 1 hour swings, you get to see a lot more. Generally, I'd say 1 or 2 a week. Now they happen a lot less frequently because of all the sideways, but generally 1 or 2 a week over 2 or 3 days. So the place that they are in the arc for the bull flags determines whether they're going to reverse or whether they're going to continue. Brilliant question. Okay, now let me see.
Thank you. I appreciate you
You're
going into that.
very welcome. Like you're always welcome to ask me questions. Always welcome, because that's why we're doing them. That's why we're doing the sessions live. And you guys are getting more and more refined in what you're posting, what you're noticing. So that it's the sessions are not presentations. Like I love them to be more interactive, and they will become naturally more interactive. Okay, so can you guys see the cheat sheet again?
Yes.
Super. So what are these reversal patterns? They are rejections. You have to see them as rejections. The wave up is rejected. The wave up is meeting a wall. And because it's meeting that wall, it has to come down, correct, gain a little bit more momentum, gain a little bit more strength, and then go up and try to break through that resistance. So we know the double top. It has an equivalent for the swing low, which is the double bottom. The head and shoulders, we call them reverse or inverse head and shoulders. And then the falling wedge that has a tendency to break upwards. Now, there's a way, there's in this cheat sheet, you have the traditional way of trading these patterns, and I used to do that. There's a neckline, which is like for the double top and the head and shoulders, there's a neckline, which is like a line of support for those peaks. So when that neckline, if you want to let's say start trading patterns, that's the safest way to trade. You watch for the break of the neckline. The first candle generally breaks the neckline. The second candle retraces back up, and then the third candle or the fourth candle are the confirmation. So never go on the first candle. Go on the second candle, on that retracement up, because in this way you will be gaining a little bit more space. You can also use stop losses if you want. These days, using stop losses is really tricky because they like to keep it within I want to say a tight range. The range is actually a little bit wider than usual for sideways, but they like to keep it very spiky. So it goes up and down a lot before it chooses direction. So if you're trading these patterns now in these times, be very careful about your stop losses. I would actually have a little bit of a higher stop loss, even though that means putting a little bit more money at risk. You would stay more in the game, and staying more in the game allows you to protect your capital for longer. Now, when I traded patterns, my charting was very simple. I was just following the patterns and going on the entry, measuring how much from the top to the neckline as a target, adding it to the neckline. But then I realized some of these patterns weren't actually meeting their target, or weren't actually reversing. And that was JD's question. Why isn't the bull flag going up? Why is the bull flag reversing? And that's when the second point of today's training, or today's session, is where in the arc can we expect them? Because the 1 hour arc gives us the context. If you want to start trading, charting the 5 minute and the 15 minute is great, but the great one for trading is the 1 hour. You get nice clear signals following the 15 minute using the 1 hour. Now let me change the screen again. There we go. So where in the 1 hour arc can we find reversal patterns? Because when we do find them, they are awesome to trade. Like, they are incredible trades, brilliant trades. I told you, for the 1 hour arc, do not trade the breakout. Don't trade this first swing. Let me use the highlighter. I love using highlighters. They're my favorite tool. This first swing, please stay away from it, because this is the trickiest. First, it's the trickiest, but it's also our best friend in the arc, because this swing will help us choose the levels of the arc. It helps us see where resistance peak is. It helps us see where mid-range high is. It helps us see if there are any other intermediary levels. The belly of my arc is green and red. That's the area that's safest to trade. If you want to make trades and win them, you check the belly of the arc. And then I have intermediate levels that I follow for any potential break-ups or breakdowns. So if you're trading the 1 hour, trying to find where the trend reverses, where the swing changes, don't trade the first swing. Wait for the double top. Here we have the double top situation, then the first drop, and then from the double top to the first drop, you know that you're going up for mountain peak. And you have 4 swings in the 1 hour arc. You have first drop to mountain peak to third drop, and third drop to final peak. And sometimes final peak can be bigger than mountain peak, but don't get greedy. Follow more or less the same level. I choose an average level for the final peak, and then the final bounce. And again, the final bounce can be deeper than the third drop, but again, don't be greedy. Follow, choose something in between. So you have 4 amazing swings, and as you're getting closer to this area of the arc, this is where the head wrecking begins. This is where I would say, take a break, enjoy yourselves, because the money that you'll be making, let's say you're not going in here, you're going from the green line. This is the belly of the arc. You see a level of support forming, and you're going up to here, the next level. This is a 27% swing here in the most. Can you see the blue box?
Yes.
Can you see how conservative it is compared to the actual swing?
Mm-hmm.
Like it's almost half of the swing. But I like to set really the 2 types of targets. Sometimes I get very stubborn and very precise, and I hold on to them. But with you, for the purpose of learning, I'll talk about the healthy ones, the reasonable ones. So if I look at this arc, I would see, trying to find that target, I would see this level first instead of this one. So I would put a target somewhere between this one and this one. And this is a 21, well, the previous measurement was 27, but this is a 21%. 10x, and 10x is again a nice little leverage. Let's say you go 5x in these swings. You go 5x, it's a 20% move, it's a 100% profit. So you can make 100% profit here. Then going down, when you see the other reversal pattern, going down in the same range, up and down, mountain peak to third drop. This is, I don't know why this is a 17. Probably one of my lines is a little bit wonky. But let's say you make more or less the same money. So 100% once, 100% twice. This one will give you maybe a 70.
Mahela,
Yes.
when you measure down,
Yes.
you're going to get less percent because it's the same size because it's measuring a percent from the higher range.
Ah, you're right. Thank you for that. Lovely. Yes, 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 yes. Brilliant. Brilliant. Thank you for that. I've never actually noticed that, weirdly enough, because it's the amount of money. Absolutely. It's the amount of, yeah, the value. Perfect. Thank you. But you guys get my point. They are still super valuable trades to make, and very how can I say, very life sustainable. Like you can make a decent amount of money just trading comfortably these swings. You don't have to get involved in this mess at the end or this mess at the beginning. So don't do that. Do the ones in the middle when the arc is set after the breakout. Now, let me just remove all of these. Perfect. So that's where I plan to show you guys how to read the reversals. So remember, go for mountain peak, from mountain peak to third drop, from third drop to final peak, from final peak to final bounce. That would be the 4 significant trades that you can make on the 1 hour arc. And the 1 hour arc is a lot more, I like to trade the 1 hour and the 4 hour because they're a lot more reliable. Now, if we want to trade the 1 hour arc, we have to check the the 15-minute signals. So we always go 4 times. If we're trading the 1 hour, we will take our signals from the 15-minute. And we will watch the progression of the trend on the 4 hour. So that's how you monitor the trade. You watch to see where it's going on the 4 hour, and you take your signals on the 15-minute. Okay, now where is it? Where is it? There we go. So let's say I've waited for this breakout to finish. I could see it topping out here. You know that I take my trading signals from the 15-minute RSI, and sometimes I use the Traders Reality for the candles, for their vector candles. I'll show you the RSI today. You can use the Traders Reality. You can add it step by step because it is a heavy information indicator. But I'll show you how to use the RSI because it's the momentum. It shows you where the momentum changes. So let's say I've been watching this and I could see the first level down, the second level down, and then the third level down. And I could see here that we are slowly bottoming out, and I would look for reversal patterns. And the nature of this arc, this is the latest arc that we've been watching. The nature of this arc is that there's a lot of sideways. There is so much sideways between every stage that it drives me mad at times. So the first W that I would see, because you know, if I look at it in hindsight, I will tell you, oh, this is double top. Look at it, clear as daylight. But if I'm watching it, if I'm really in it, I would be looking at it. Let's see, and I might think that this one here is double top, and this is the first drop. So I might think that here and by correspondence with the RSI here, here is where we bottomed out. And if you look at this little thing here, you will actually see that it looks like a W. Can you see it?
Definitely, yeah.
Definitely. So I would decide if and let's say I see it testing, because I like to put lines in. Like when I see candles stopping naturally at a level, I would have this line in, maybe not as a green line because it would take a little bit more development in the arc for it to be the main support line of the arc. But I would have this line in, and I would say, okay, I'm going in. This is a W, and it's going to reverse, and I'm going in here. Now, there are two ways of trading this W. I'll tell you the beginner's way, and second, I'll tell you how I do it. And I do advise you to do it my way, even though it might not seem a beginner's way, but it's how can I say, it's more risk management. So if I were to go in here, I would see it go up and reverse, but then for two peaks here, let me show you something. Where is it? Okay, remove. These two peaks here, what do they look like? An M, exactly. So what would a beginner do? If we go in hoping that we're gonna go up to, let's say, at least resistance peak here, what would a beginner do if they were to see this M? Leave.
They go into a short, yeah.
Yeah, that's it. Exactly. Get out. Get out. Because if you entered here, or I put it here very, very, like you'd have to be precise to go in here because the candles move really quickly. So let's say they go in here, they would see this M forming and they would say, no, 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 we're not going anywhere. Now the rejection here at these two tops tells me the movement upward is being rejected, and we can actually see the rejection in the RSI topping out as well. So here a beginner would leave the trade and go into a short. But us knowing the arc, when we see these double tops, what do we know is coming?
A breakout.
First drop.
The first drop, that must have been Neil by the sound of your voice. Yes, not yet the breakout, JD, because we're still at the start of the arc. So the first drop sometimes can go below the third spike. Generally, it's around the same level as the third spike. That's why I said this one. It's only now that I look at the arc that I say, oh, this was the double top, not this. So we know that the first drop is coming, and we know that the first drop is in and around the third spike. So if we know, if we've entered this short, we know it's not going to be too long. And even here, let me see, Oh, this was actually this one was the war one. Yes, this one was
Yeah, that was the war.
yes, exactly. I remember it
I
because I
woke up in the
DCA
morning and it was 10% down.
10% down. That was it. That was it. There was the breakout of an invasion. We can say invasion. Now, so but the point that I'm trying to make is even like that was exceptional. That was an exceptional 10% below the third spike. But a beginner wouldn't a beginner normally wouldn't normally have this 10%. It would go down to maybe 3, 4, 5, and a beginner wouldn't take profit because they would be hoping. I'll tell you what a beginner. Thank you, JD, for the idea at the start. A beginner would measure. A beginner would measure, because I used to do that at the beginning. A beginner would measure this after the M's and say, "Oh, look at this. This is a bear flag. So we are going down to 1400." Especially like if the news were the same, would be like, "Oh, okay, we're going down to 1400." So that's what they would measure, not seeing that the third steps are already complete. They would be ignoring the bottoming out of the RSI here, hoping it's gonna continue. So very few people would pay themselves here. Very, very few. But us knowing that there are 3 steps down, there's a third spike, there's a double top, and then there's the first drop. We know that the first drop can go too far. So again, my advice is, which is what I did in this trade, because I remember now the trade. My advice is, if you see the double top forming and you entered a short here, I entered a short here. I entered the short here. No, I entered a long here. I entered a long here at the W. There we go. And then it started, I saw the double top, and then I realized, oh, we're coming down for the first drop. And then the whole war thing appeared, and I was following it down, and I DCA'd at 20, 20, no, sorry guys. I entered here at 2600. I remember the numbers. ETH numbers are a lot easier to remember than XRP numbers because they go in levels of 100. So I entered at 26 and then I DCA'd again at 25, somewhere around here. And then because of the war, I stopped DCAing in because I said this can go a lot lower. And then I DCA'd on the way up when it broke diverges. Anyways, so a beginner would enter a short and a beginner wouldn't pay themselves. So you would lose first because you might take a slight loss because you thought you were going up, and it topped out here and started going down. So you would have a tiny loss here, and then you wouldn't be paying yourself because you'll be following the bull flag because you haven't checked to see if the levels are complete. And if you have a doubt that the levels have completed, be very mindful and watch the RSI. Be religious about the RSI. There's a reason why I show you only the RSI, because that's the one that I use most of the times. Even Traders Reality these days has been really tricky, and I avoid using it because it can influence me at times. So watch the RSI for any confirmation of the momentum ending. The beginner would enter a long, and then exit and then enter a short and take a small loss and not pay themselves. Now, what I would do is I would DCA. The whole point of this demonstration is know where you are in the arc and always have your DCAs ready. Do not load in. As a pattern trader, I would load in. I would put all my money first. I would go without a stop loss, and I would be liquidated very, very rarely, but it would be painful. It would be painful And it would be painful not financially, but it would be painful because it would get me to doubt. And when doubt creeps in, your strategy is starting to be a little bit shaky. So anything that you can do to protect your capital and keep your confidence is, how can I say, is a constructive strategy. And that's where the DCAs and knowing where the ARC is have helped me loads. So where can we find the W's? We can find the W's between the first drop and the first step of Mountain Peak. And here I'm going to show you a W that doesn't really look like a W. It actually is a reverse Head and Shoulders. There it is. So when we watch this, when we go in, this would have been a brilliant, this would have been a nice short as well. From the M to the first drop, brilliant because of the war thing. But then here, we see rejection here, and rejection here. So 3 rejections at the bottom. 3 rejections at the bottom, and then the RSI does what? Goes up. Momentum goes up. And again, I very recently, because of all the sideways, I tend to split hairs when it comes to the RSI. I tend to say, you know, it's how can I say? It's deceiving at times, but it's not deceiving in a trend. So right now, as we are transitioning, momentum might go up and down in a lot of zigzagging motion. However, when you see 3 rejections at the bottom, when you see momentum going up, this is a sign. This is a signal. On the 15-minute, this is the start of a wave up. Now, the hard part here would be to determine how long does this wave up last? Where are the 3 steps up? Because look at this mess. So let's say you enter here at this reverse Head and Shoulders, and then you follow it up. And when you follow it up, you watch the 1 hour arc. Don't go into take your signal from the 15-minute, but then change to the 1 hour. So when you change to the 1 hour, zoom out. You are in a trade. Zoom out and see where your support levels are. If you can't see them here on the 1 hour because the movement, the previous swing was really violent, I'll change to the 4 hour to find my support and resistance. So let's say I entered a trade here on the 15-minute signal. My next steps are, which are the 3 steps up? Where is this swing going? Because if I'm just watching the RSI on the 15-minute, I might be getting different signals. So I told you, you enter on the 15, but you watch the progression on the 4 hour. So on the 4 hour, you set your support and resistance, and you check the swing with the arc. And I'll do a whole session on support and resistance and how to correlate them between the arcs and between the time frames. And I would also watch. I did it recently in the trade that I took profit from. I would also watch the RSI on the 4 hour for topping out. So here, always zoom out if you want to check momentum. Always zoom out. Where's the marker? Here I see a nice peak. Then there's a second peak. Then there's a third peak. And here is where it's topping out. Now, because of the arc, because of this white line, which is a nice support and resistance line, and it's a strong one from from the previous arc. I would have the experience to follow it up, but I know that as you start trading, especially with all this sideways in between, you might be tempted to take profit here, which is great. Which is great. You don't have to, like, you here, or sorry, I meant or here, because you see 1, 2, 3 steps up in the 4-hour RSI, and that's okay. That's okay. The levels are the hardest thing to establish for all traders. All traders, forex, crypto, levels up and levels down are hard to establish. They're even harder now as we are transitioning from bear to bull. They're even harder now. So that's why I'm saying pay yourselves. So if you watch the 4-hour RSI and you see 1, 2, 3 bumps up, take your money and enjoy yourself. Wait for it to top out. Now, that would be this. That would be this reversal here. So from first drop to mountain peak. I took my profit here at, I didn't follow it. I took my profit here. I remember this trade. I said 28.50 and I took it at 27.60 or 70 or 80, somewhere around here. Yes, when I saw this. Yes. And I saw the momentum going down on the 1-hour RSI, and I took my profit here. And here was a brilliant swing up. What did I do here? I went into a short here. Because I thought this is mountain peak, and then I DCA'd for this one, and that takes us to this pattern here. I need to, good. I'm going all crazy now with the highlighter. This is all full of highlighters. Okay, super. So here we have, we get to this structure. So we have the first peak, we have a slight correction, we have this first peak, we have the second peak, we have the third peak. And here, if you can judge this an M like this, or you can just look at this one. However you choose to do it, I suggest you watch the RSI. So here is the RSI topping twice, which means there has to be everything works in ups and downs. After the 3 levels up, there has to be a correction. There has to be 3 levels down. How far down? That's the issue, because when the trend is bearish, the correction tends to be deeper. When the trend is bullish, the correction tends to be more to the upside, less. So let's say you see these 3 peaks, which are, let's face it, they're really hard to ignore. Really hard to ignore. You might see these 3 peaks as well, because now it's easier for me to tell you about them. But in real life, I would see these. I would see these. I would see these. I wouldn't consider these a reversal because they're too much in line. I would consider this kind of a swing down and then up a reversal, because it's like it's building momentum, but then it can't break through. It's getting rejected. Just as a tip, more so like a visual tip. So when you see these, where are they? Perfect there. when you see these three peaks, again, I would watch for the RSI topping out. Let's see what is the RSI situation here on the 15-minute. Let's say, yes, the first one, to be 100% honest with you guys, the place where I would enter this trade on the 15-minute, and I have done this a lot of times, and I'll show you why it's perfect. So the place where I would enter this trade is somewhere around here, because on the 15-minute I would see these two peaks with a divergence. So momentum, this peak is low, but the momentum is high. This peak is high. There are two double peaks here, but the momentum is lower. So here is where I would enter the trade for the short. I would see it go up to here, and I would say, okay, this is where, again, that's where the arc really saves me in terms of clarity when I'm trading. Because I look at this as the resistance, as the major resistance of the arc. So I know that it can go higher than this. So I would DCA here, I would DCA here, I would DCA here. I always have 3 DCAs prepared for the up, as in if I'm shorting for my counter direction. And then let me put the divergence line. It has a nice clear divergence line, this one. This one, yes, I remember this short actually, because I used this line. This was a brilliant short. It was, I'll tell you the story. Here, so I use this divergence line as a, there it is, as a center line as well. So I DCA'd in here, and it went up here, and here is where I was like, oh, is it really gonna break out? Is this arc done? That can't be third drop. This cannot be third drop. It's impossible. After this mountain peak, this can't be third drop, sorry. So I waited for it to come down, and I put some more money in here. And I think that's where I stopped DCAing, because I was happy with the amount of money I had in. And I was waiting for it to hit the 2400. And it hit the, I think I took my profit at 2450. Where is it? Somewhere around here. Yes, I think I took my profit here. I took my profit here. 25.85. Then it came down. Don't remember this. I think did I put more money in? I don't remember. Sorry guys, I'll have to check my notebook, and I won't do it now. So the point I'm trying to make is, as much as you follow reversal patterns, especially in this period, bear in mind 2 things. First, where you are in the arc. Second, the levels of the arc, the levels of support and resistance, because there needs to be 3 steps up, 3 steps up and 3 steps down. With all the sideways, it's really hard to gauge the levels, and it's more now it's a little bit more, how can I say, cautious to do shorter term trades with all the sideways and go for all these mini M's and mini W's than to wait for the bigger ones. But normally when we have a trend and when there's less sideways, waiting for these bigger swings is more profitable. So we find a W or a reverse head and shoulders between the first drop and Mountain Peak. At Mountain Peak, there's a head and shoulders here. Here you can look at this one as a giant M or as a, is it a head and shoulders? I think it could be considered a head and shoulders as well. Or even a rising wedge. It could be even a rising wedge because I think these ones go like this. Clown. Yes. So we have higher lows and higher highs. So you see how you don't have to see a clear M or a clear head and shoulders. There are these three types of shapes, let's say, that might appear. But their main message is the same. There is a rejection at the level of support, or there is a rejection at the level of resistance. Here, there's a rejection at the level of resistance, which means we're going to have to come down. That leads me to the third point. Is that okay? Are you guys clear where to find them on the arc?
Yeah, I would say so.
Yeah, like it's a bit here. Like look at this mess here. Look at this mess here. What is this? If you are trying to trade this, it would drive you mad. It would drive, and this lasted from the 11th to the 14th, 3 days of madness, and the range was 4%. So you can go for 4% up and down. Even in this, if you let's say you're putting $10 in, and you're moving up and down between these levels, and you're checking even here, just to show you guys how trading is a little bit like, you know, it's like mathematics. It's a bit like science. There's a baby M here. There's a baby M here. Just go as a pattern trader. I would go in when the pattern is clear. If you have doubts, like this one here, this is a clear W. This one here is a clear W. This one here is a clear W. So if here, this is not clear to me. This is not clear to me. These, they're called hypodermic needles, whatever, or V-shapes or whatever. These are not clear to me. So as a pattern trader, I would only go in when the RSI confirms it here. 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 So go in if you're pattern trading between the levels of support and resistance, and go in when your patterns are clear to you and confirmed by the RSI. Don't go in for any ziggy-zaggy. So yes, I sometimes would DCA maybe when the RSI hasn't topped out, because I know that the nature of this sideways might mean that that's the most it can do, and I can measure my risk and I can manage it. However, when you're starting out, it can affect your morale, it can affect your confidence if you get it wrong. So try not to get it wrong. Not necessarily you will get it wrong, like that's the natural learning process, but try not to get it wrong when you were clear. Because if you go in, let's say on this M, confirmed by this RSI, and let's say rarely it might turn up, and it might let's say invalidate itself. At least you know you went in when you were clear. So you had the pattern, you had the rejection at the resistance level. If we you see, now to me these levels are easy to establish. Like if I extend this, there's the level. So if you see this rejection here at the level forming an M, forming a double top structure, it's confirmed by the RSI, it's confirmed by the place in the arc. If you look at this as a 5-minute arc, this is your double top here. You know that it's gonna come down for first drop. And then you can follow it up to mountain peak, or you can follow it in this zigzaggy motion. But I would suggest follow it up to mountain peak. That's for the confirmation. So you have to make sure you are clear when you're making the decision. I would say the thing that undermines me most as a trader is doing something when I'm not sure. So how can I say, being sure is an actual thing. I know that the market can reverse on us anytime, absolutely, but you need to have your confirmations. You need to have your 3 reasons why you're entering a trade. And even if that trade doesn't work out, you still had your reasons. And you won't be undermined as a trader. But when you go into a trade, because it's some people say, oh, it's 50-50. It's 50-50. It might work out. No, that will undermine your how can I say, your discernment. That will undermine your clarity in terms of making that decision. So go in, use the pattern, use the support and resistance, use the place in the arc, and use the RSI. You have 4 things that you need to check. And if they are all green light, go in. If one of them is not okay, take a step back and wait for the green light, because there will be a green light. There's always a trade that goes by the book. That's next. There are trades that are a little bit wobbly, a bit more unclear, but there's always a trade that goes by these rules, and you take that one. You take the clear one.
Would you please repeat those 4 conditions?
Yes. So the first one is the place in the arc. The second one is the levels of support and resistance, rejection at support and resistance. For instance, even this sideways, even I've seen so many sideways, even this sideways, the fact that it's constantly getting rejected here tells me that it's going to go up. Third one is the pattern, the M or the W in the candlesticks. And fourth one is the confirmation in the RSI. And I told you I use the stochastic for exiting, but I use the plain one for entering. Okay. Now let's. So the first part of the session was about defining them. What are the reversal patterns? The second part was where in the arc we can expect them, the 4 swings. The third part was the confirmation. I use 3 points for confirmation. You don't have to use 4, but 3 points are essential. 3 of these are essential. The arc and support and resistance and the RSI. I go less by the pattern these days because the pattern has so many shapes. But again, for you guys, if you want to use the 4 of them, go for it. Also, on the topic of confirmation, wait for the candle to close. So if you're taking let's say here, let me see. Okay. Can you see this, M?
Yeah.
So let me remove this bit here. So I see the first part. I'm watching for the first part. Then I'll be watching for the second part. Now, I see this. Now, I will do a session on types of candlesticks and how we can read the candlesticks. But if I see, this is like a pin. If I see a long wick at the top with a little bit of a body, I know that this high price was rejected. It was rejected here, it was rejected here. However, this can be two things. It can be the rejection, or it can be a little bit of a breather. After the bulls have put in effort to come up, they might take a little bit of a break, like here. See that the candles look the same? So I would give another candle the chance to show me where this is going. I wouldn't jump in on the first candle. I would always wait for the second candle to close. So I see this shaping up like an N and then maybe coming down for an M. I see the first rejection. The second candle tells me that the rejection is complete. I wait for the 15 minutes for that candle to complete, and then I will go in on the third candle on this one. Let me see if I can change the color. No, it doesn't. Can you? Do you guys see what? Do you guys? Can you follow me? So, just to recap, the point that I'm trying to make. Good. So the point that I'm trying to make is the first candle will show you the rejection. The second candle will confirm it. Wait for the second candle to confirm. Go in on the third candle. Yes, you are leaving a little bit of profit on the table, but that's okay because you are going in on the confirmation. For instance, if you were to go, let me find an M that doesn't become a validated. We have a lot of good M's here. This sideways wasn't too bad. Here, I think this one would be no. You guys will see what I mean when you look at the chart. You can find examples of when an M actually turns up. So there is a little bit of rejection at the top, but then it continues upwards. So the point is always wait for the confirmation. You will see me say when we're exiting the trade, I'm more enthusiastic about exiting the trade because that's where you're taking profit, you're paying yourself, happy days. But when you're entering the trade, I always say, no, let's be careful, let's wait for confirmation. And waiting for confirmation means waiting for that candle close. So the first candle shows you the intention, the second candle confirms it. Wait for the second candle to confirm. Then the fourth point that I wanted to make was when these patterns invalidate. And I made an example of it at the start when we talked about the bull flags. This looks like a little face here. So again, we go back to the hour. Okay. So for pattern invalidation, we need to know where we are on the arc for the same reasons. Because, for instance, you might find an M here, you might find an M here, you might find an M here. You might find a little, and they are confirmed by the RSI. But what do we know about these? What are they from the first drop to mountain peak?
Impulse waves.
Yes, they are the 3 steps up. That's it. They're impulse waves. So sure, we can go in and trade these little corrections, but we wouldn't be getting too much out of it. Plus, it would be very stressful. I find that's why I like DCAing, staying in a trade for weeks, because it allows me that slow-paced charting, focused TA, bigger pattern, bigger time frame trading that I personally enjoy, that goes with my character and with my temperament, because I would get very hyper here, very hyper going in and out. So it wouldn't work for me. There are people for whom these reversals. So if you know there are 3 steps up, you would see the W here go up for this swing. You would see the M here go down for this swing. You would see the M here go down for this swing. W here go up. So you would follow this 1 hour impulse wave up step by step, and you would be trading it up and down. However, the more you go in and out of trades, the more you're risking. Your risk increases. You're doing more trades rather than following only one direction up and down. So it is riskier. It might not sound that risky, but it is riskier, because trust me, because I've tried it. You can test it yourselves for a week or 2, trade those tiny swings, but I wouldn't. I wouldn't be for it. So if we know that these are 3 steps up, then that means these M's will invalidate. They won't go down. Usually this M would take us all the way down to here. Or then we say this M will take us down to here, or this M will take us down to here, according to the levels. But they invalidate, they keep going, because the arc is on its way up to Mountain Peak. So that's where patterns fail us, because they're not going our way in terms of where we want it to go. If a beginner is looking at these and charting them as bull flags, they expect this to break up. So they would be having a stop loss here, and that stop loss would be hit. So that beginner would actually lose maybe 15, 20, 30% here, just for the market to reverse and go up. And then the beginner is like, oh yes, it's reached my target, but it's reached it in a different way. So be mindful of the 3 steps up and the 3 steps down, because that is the place where patterns get, I'll say, invalidated, but they don't invalidate themselves. They just don't play out in their full force, because the force is with the swing. So when you're going up, the pattern that will play itself out more will be the W. And the M won't have that much of a force, so you'll have to be careful shorting. When you're coming down, again, the pattern that will play itself out is the M most of the times. But how that pattern will play out is very unique to each wave. For instance, here you can see that the bulls really struggle. They spend their time consolidating here, whereas the bears, they did a big M here. I love seeing new things. When I show you the chart, I love seeing new things that I didn't pay attention to then, because I was following the bigger picture. So this M, look how beautifully it took us down almost to the bottom. And then this M took us down to a proper third drop. So yes, there might be a moment where we might say the pattern gets invalidated, but it never gets invalidated in the big picture of the arc. It always serves the purpose, and the purpose here would be the slight correction, the small correction. So know where you are in the arc, and know where you are. For instance, here. For ETH, this is the trade that I'm in at the moment. I DCA'd here. I have a 2740 or 50 entry point. I am delighted about that, because I started here. I took my profit here at 24.6, and then I put some more money in here with Neil, and then I put some more money here this morning, no, here at the breakout, and then some more money in this afternoon. So 3 times I've got my up kitty invested, and then I'm looking for a nice drop, maybe to the 2500, maybe to the 2400. So what I don't want to lose my train of thought. What I'm trying to show you here is, see the difference of levels between the start of the arc and the end of the arc. This is something that you need to be very mindful of, because you might say, oh, this only had 2 levels, now we're continuing up. Here everybody saw this as a bull flag, but this level in itself, where is it? Here. This level here, I'll put it on the line. This level was the first level. But it's as we get close to the end of the arc gets narrower. So you will still have the 3 steps up, but not at the same length, if that makes sense. Don't expect the final peak to reach as high as Mountain Peak. It might at times, but don't expect it to. Be mindful of that towards the end of the arc. Okay, how to trade them. Number 5, the final part of the session. So I have I'll say the same thing as I did when I did the training on entering a trade. So enter when the pattern is confirmed. Enter and here you have the 3 your 3 confirmations. You can enter, for instance, I'll show you where you can get trapped, because I think that's in these times that's really good for you to know, because I can show you the ideal scenario, but we rarely play out the ideal scenario. In real life, we get sort of, well, I'll say trapped, but we actually can manage our trades very well, even if we didn't enter at the most profitable moment. So here would be a moment where you would get trapped, because you would enter on confirmation. You would have the RSI between where is it? Between this, yes. Look how textbook perfect this is. You would have it's not as textbook perfect as I imagined. Ah, yes, here, perfect. It's not my favorite divergence. It's called an exaggerated divergence, because here the level is going up, and here the RSI is stagnating. So in real life, you would have a look at, you would first see the divergence, and then you would look at the resistance line, and you would see this M forming, and you would say, okay, great, I am going in. And you would wait for the first candle. I'll show you here on the 15-minute. I've played this out so many times, and now it's like it's so good to tell you about these traps. So here you would see the first candle being a clear rejection candle. I look at the body of this red candle compared to the green one. Then the second candle, you would wait for confirmation, and then you would enter here. This would be your, I'll put a yellow line. So you would enter here for a short. And it would, if you are careful, super cautious, you would go down to the next level of support, and it's a great trade, 80%, happy days. Now, if I were doing this trade, I would go in for this level. And here is where I would get caught, because it wouldn't reach this level. Because of the nature of the sideways, it would go a little bit higher. It would consolidate here, and then I would see it breaking out. And I would stay in, because that's what I do. I would stay in and I would follow it up because I know there are only 3 steps up. And speaking about market makers, we started the session speaking about market makers. Guys, there are levels that a coin can move between every day. Like if you go to, if you put your Traders Reality on, can you see my Traders Reality? You can see a different screen now. So if you put Traders Reality, you will have M5 and M0. These are the 5 levels that this coin, Ethereum, can move between today. It went a little bit higher than M5, but the market makers don't throw the market out of balance. When they have their market maker meetings and when there are those gaps in the market where they decide how to move, they actually set these levels. This software calculates these levels. So when you're trading, don't panic. If you went in here at the yellow line, going in for a short, and you didn't take profit here, and you're kicking yourself, oh, why didn't I take profit? It was good profit. And then it reversed on you, and it went up. Know that it can only go up for so long. So if you went in here, you haven't even DCA'd in once. You still have your 3 times to DCA available. And look how beautiful this is for a triple top, sorry. So it can't, if you layer Traders Reality as an indicator, your levels of support and resistance and the RSI, and especially if you watch this on the, not the 4 day, 4 hours. If you watch your trade, because again, you are now trading the 1 hour, you're taking your signals. If you watch your trade here, you will see that here, even on the 4 hour, the RSI topped out. There are very rare the cases where it goes ballistic to the moon. Very rare. Like over the past 4 months since I've been full-time trading and watching this 24/7, I've only seen it once. And because of my DCA, I've lost 20% in that trade. So it was when XRP caught us all by surprise, and it shot up in 3 days. It went crazy from 60 to 90. So I DCA'd all the way up, and I folded in too soon. I'm still kicking myself for that. But the point I'm trying to make is it can only go up so far. And if you enter at confirmation, your 15-minute RSI confirms it, your support and resistance confirms it, your place in the R confirms it, your Traders Reality confirms it with a blue or a purple indicator at the top for the M, then you're in a, how can I say, in a high probability trade. There's never a 100% probability trade, but you're in a high probability trade. So enter with your 3 signs of confirmation, your 3 signals of confirmation, and exit on momentum. Here, I remember this. I was in this trade. And I think I entered somewhere around here. I thought no. Let me check. Yes, I was in this trade. I entered here as I thought this was the final mountain peak on the 15 minutes because that's what I was trading then. I took my profit here. I went in. I kicked myself here for not DCAing out. So we're DCAing in as we're protecting ourselves. And then as there are profits being made, DCA out. And I kicked myself for this double bottom, reflected in the 1 hour RSI that I completely ignore because that's me getting super stubborn like a bull, super stubborn, and saying no, it has to go lower. It has to go lower because the ARC tells me it's gonna go lower. So I didn't take any profit here, and then it went up. I didn't exit the trade. I stayed in. I DCA'd. Happy days. and here I took profit twice. I took profit here 24, and then I took profit. No, I took profit here at 25.7, and then I took profit here at 24. I took the most of it here, then I DCA'd in somewhere around here, and I put some more money in. But anyways, this short trade that I entered here, this has made me at the moment 100% profit from these 2 sessions of taking profit. So this short trade that looked disastrous over here, I remember I was having the session with you last week, and my trade was minus 40% in the red. Here it started with minus 20, and here was a minus 40. I was like, oh, what's going on? But this trade actually made me 100% profit because I stayed in. I DCA'd, I kept my cool. I said, no, we need to come to close to the bottom of the arc. I still believe we are gonna come closer still. I think there's still another hit to the low, because that's why I'm in this short. If I close this short, I'll let you guys know. So exit on momentum. If you're not exiting, because again, like me, you think that the longer term trend will still has space to come lower. If you're shorting, take profits, DCA out, close and take 20%, 40%, 50% of your profit. And then you'll feel much better. You will have a different state of mind when you're keeping that trade open, because you know you've already got your money in your pocket. And if you want to DCA, like I did now, I DCA'd a part of my profit. So part of my profit is in my kitty, and the other one is in the trade. So basically, again, my initial capital is safe. So that's it. That's it for me. Again, I can't believe I've been talking for almost an hour and a half. I will give you a task in the chart analysis, just to look at the 1 hour arc and map out the reversals. And there will be a lot of reversals, and then map out, you know, like your paper trading, which would be the ones that you would take. That's the more technical task. The more practical task would be map out on the 5 minute arc, because this 5 minute arc is taking ages to complete itself. Where is it? It's here. Are we doing another lift up? Oh, for God's sake. Let's see. Very good. A little bit of market manipulation here. Sydney is coming in with a boom. Maybe they want to do another leg up for a triple top. Okay, so if you want to go to the 15 minute arc after the session, and watch for example this M formation. Pico was asking me about this M formation. Where's do we have the RSI confirmed here? Yes, here and here, the RSI is confirmed here as well, but then it bottoms out here on the 15, and it starts going up here for the, so we have an M and then a W. And again, we're in a tricky part of the arc, because we had the mountain peak, and then we had the final peak as well. Let's see. So I'll give you guys a task to map out the 5 minute swings, because the 5 minute swings would be easier to trade now. We will be in a tighter space. I know that it looks like we're doing something, but all we did today was a 10% lift, not too bad, but generally it's not that much in a day. So and the stochastic looks like it's topping out, so that might be it. This might be it. This might be the W on the way down, because we have 1, 2, W, scoop 1, scoop 2, scoop 3. Let's see. Okay, so any questions?
May I ask you,
Of
like,
course.
so right now we're looking at the market.
Mm-hmm.
In terms of where it's at in the current arc, would this kind of be potentially where the final peak is forming and then it going down to the final bounce?
Absolutely.
Okay, cool.
Yeah.
So I was just curious about that.
Yeah. That's exactly where we are, JD. So if we're looking at the 1 hour arc, I'll start with the 4 hour arc. So if we're looking at the 4 hour arc, because I have it nicely labeled, the 4 hour arc is my neatest work. It's the final stages of all of them. It's the final peak of the 4 hour arc that we've had. Then the issue is, have we had the final bounce? That's the $1 million question, because if this is the final bounce, happy days, then that means we're on our way up for the break out and up. However, there are two possibilities, and I keep listening to Tino from Traders Reality, because he's looking at liquidity pools, he's looking at fundamentals. He has 3 sessions every day with all the markets opening. So, and he's and I listen to him for confirmation, because he's been in the market for 10 years, and it's good to have someone to tell you, how can I say, what are the odds for this move or that move to happen. So, and he's saying the same thing. We don't know if we're gonna come down again to the initial levels. And for Ethereum, the initial level is actually the level on the day, and that level on the day is 1700. So we don't know if we're gonna come down to the 2400 again, if we're gonna come down to the 1700 again, and then move up, because there is evidence on both sides. There's evidence on both sides. So my guess is, based on the momentum of all of this, that this is not the breakout. This is just the 1, 2, 3, 4, and now we're coming down for 5, and then we're gonna start our 1, 2 for the way up. But to answer your question, that's exactly where we are in the arc. We are in the final stages. For the day one, for the 4 hour one, for the 1 hour one, for the 15-minute one as well.
Awesome. Thank you so much.
You're very welcome. That's why it's so hard to trade now. That's why there's so many variables, because the space that we're moving in is so small. Okay, now I could keep talking for hours. I'm unstoppable. Any other questions?
Yes, I have 3 questions.
Super.
And you're talking about a center line and a divergence line. Can you add a little more so I have clarity? You also mentioned that could be the same thing in some cases, but could you add a little bit? I'm not sure what you mean by these terms.
Absolutely. Now,
I have a rough idea.
yes, very good, very good. So I'll show you on the 4 hour.
Mhm.
Perfect. So Roy is very particular about these terms. I'm a little bit more of a flexitarian with them, and the reason being is I see how they work in practice. So you see, a divergence line is a line that follows, for instance, on the way up, it follows all the lows from the first one to the most recent one. So this starts off as a divergence line here. Here it breaks it it retests it, it comes down. So the swing up is officially over here. However, it doesn't go too low. So what Roy would do to keep true to the technical term of divergence line is he would move the divergence line here, because the divergence line can never be broken. So if it gets broken, that means the swing to the opposite direction has been confirmed. So this divergence line, I'll change it to, no, I'll leave it yellow. This divergence line confirms when the swing down has started. And the swing down hits this level as it did previously, but now it actually breaks through it. So if you're smart and you're doing this 4-hour trade, here is where you would DCA. A center line, which is what I use, and sometimes I call them divergence line as well, which drives Roy mad. Where is it? I'll clone this. A center line is a lot more flexible, because a center line will actually show you the center. Let me use the center of this swing. And when that swing loses momentum, so it's a little bit more how can I say, timely than a divergence line. So if I use the center line from the first low to the second, I would use this as a trend line going up, up, up. Here it tests, here it breaks, here it hits the support, and it comes up to retest it. And if I were to tell Roy, look at this divergence line, he would say, this is not a divergence line because it went up from here. So the yellow one is divergence line. The pink one is the center line. So the pink line shows when the center of that movement, the core of that movement, the support of that movement is lost, like a trend line. The center line is a trend line, but it's that center between this swing and this one. So if I were following a center line, I would let me not the pencil here. I would DCA here at the retest, and this is sometimes I do that when I have confidence on the bigger swings, the mountain peaks and the third drops and the final peaks and the final bounce. So these 4 big swings, especially on the 4-hour, I would DCA when the center line is tested. These days, because I'm trading lower time frames on the 15 minutes, I would wait for the divergence to be broken, because it gives me a little bit more of a higher probability. I'm sure at the divergence than at the center line, because a center line, like a trend line, can be a bit more fickle. So that would be the difference between them. Does that make sense?
It does, thank you. And just a quick question. If it's a divergence line on the way down, you're measuring along the tops, I assume, the highs?
Yes, that's it. Perfect. Very good. Yes, let me move this one. So the divergence line from here to here would go like this, which would make it actually very hard to follow. Do you know what I do in real life? This is not a practical divergence line because of the angle. So a divergence line needs to diverge. So I would use this as a divergence line, because I think this is one swing, this is another swing, and then I would take, when this swing confirms with this big M on the 4-hour, an M on the 4-hour is invaluable. It's huge. M here, brilliant. So here I would use this as a divergence line, and I would DCA in here, and then it would go down, and I would be prepared as well to DCA in here as well, because I know where the arc started, so I know that it can't go, the third drop cannot go too far off from the first drop. So you see how the arc sets us up to understand the levels. Yes, and then the center line for the top. I think more or less like, yes, like this. Let me see. This is a tricky one because it has this M here makes it really hard to chart. So this is the swing down. Where does the swing down lose force? It loses force here. So I would, yes, very good. That's it. So we have the two tops here that I would use it for. Here the swing low keeps here the swing low keeps under the trend line. Here it loses a little bit of force. Here it keeps under, and it loses its center here. And here is where the final upswing starts. So they could be here. I think so. The DCA with the divergence would get you to put more money in here. The DCA with the center line would get you to put more money in here. I use the center lines more for the longer time frames. I don't center line the 15 minutes unless I really have to. But the 4 hour and the 1 hour are great for center lines, or the 2 hour. Very good. Any other questions?
Yes, I have two more questions. If you
Go
have time,
for it.
nobody else
Yes.
has questions.
Yeah.
Okay. One is should be pretty straightforward and easy. You said something about YouTube, I guess, videos by Tino from Traders
Yes.
Reality. Did I
Yes.
get that right?
Yes.
Okay, now that's 3 times a day.
Yes, Tino has 3 sessions. He doesn't do them all the time. Let me okay, traders. Let me show you the channel. He does short videos, about half an hour. Let me change the screen. Share your screen. Change window. Where is it? This one. So this is it. This is the channel. Traders Reality. So Tino does the New York close, the New York Open, and the London Open. So 8 o'clock in the morning Dublin time, then 1 o'clock in the afternoon for New York, and then 10 o'clock in the evening for closing of New York. And he does 30 minutes, 40 minutes, and he's not how can I say, you don't have to listen to all of his stream. He does live streams, and you don't have to listen to all of his streams. You get your main ideas in the first 10 minutes. He does Bitcoin and Ethereum. He might talk a little bit about commodities and what's happening in the rest of the markets, because they're connected. But you get your main fundamentals from him. So I find it a nice, handy way to listen to what's going on the day. For instance, today he was talking about positive news coming in, both on war related, but also the employment rate, and then What else happened that's really good?
I think is that Biden report
Yes,
pushed up
that was
yeah,
it.
the prices.
That was it. There was, yes, that was it, about crypto.
Yeah.
Yes, that was it. That was the third one. But again, like all these news are used by the market maker to sway the market. There will be a reversal. So it does sometimes take, a bit longer than expected, because they like to play with the length of the swings, but there will always be a reversal. Yes, so that's what I listen to. That's the only channel that I listen to every day. I don't listen to other YouTubers because they might influence my the way I see my own TA. I realized that at a point in my life as a trader, and I realized that I want to listen to somebody that gives me an unbiased view of what's going on. And again, you'll find your own YouTubers to listen to, the ones that are really that suit your own character and personality and a way of trading.
My last question, I didn't really write it down clearly. It was something about using the 5 levels as part of the confirmation here. You had 4 things, but the place in the arc, I guess it was something like using level 5 and level 1 sort of as a supplement to whether a reversal pattern
Yes,
would play out or something.
absolutely. I'll switch the screen. Where is it? No. Just give me a second to change here. The 5 levels on Traders Reality. Yes. I don't use them as a signal, these levels. There are traders who do. You can see it. Very good. It changed automatically. So what I use them, I used the 5 levels today as I DCA'd into my short. Oh, look at that rejection. Very nice. Very nice. Is Sydney setting up an M here? We might see it later. I used these levels today because to put my final DCA in here, because I realized it can't go any higher than this. It can't go any higher than M5 or the high average daily range. That's what high ADR stands for. So I knew that it has to stay today within this range. So I don't use the 5 levels to enter a trade, but I use the 5 levels to DCA. There are traders that might trade between these levels, but I don't, because I again I do multi-day trades, and these levels change every 24 hours. They change at midnight. So at midnight, I will have to check to see where we are. For instance, if you watch on Traders Reality, Tino has a playlist where he describes how to use this system. He's a scalper, so he will use it on the 1 minute, but he explains how these levels work. So M3 in the middle is generally the reversal level. So if at midnight tonight we are in M3, I will keep my eyes out for 2 things. Either where the M5 is, that's the first one, because I want to make sure my liquidation covers that. And the second thing is where the M0 is, because if we are reversing from M5, on the previous day, chances are we might go down to M0. So that will be my final target for that short. And then I will be looking at the ranges, let's say around M2 or M1 to take profit. but that has to be in confluence with everything that I've charted so far, because just like any other indicator, it has a lot of shortcomings. So it's very fickle in times of volatility. Today it's been I'll show you. Today it's been all over the place, because look, in times of volatility, when the market is heavily manipulated, here this would be this blue vector would be reversal, this blue vector would be reversal, this purple vector would be reversal, and what happens after each of them is it keeps going. So if you had your stop loss above, you know, these blue vectors saying, oh, we're going to reverse, you would get stop lossed out. So in times of volatility, indicators have to, I use indicators as a way of triple checking or quadruple checking, but not the first port of call. So my other TA takes priority, because as volatile as we are now, we are still part of a bigger trend. We are still part of a bigger picture. And if you want me, I'll say again the confirmations. So the place in the arc, the support and resistance, the pattern, the RSI, and then the trader's reality.
Thank you.
You're very welcome. Very welcome. Any other questions? I'll post the task for both the 1 hour arc and the 15-minute arc for you guys to chart. And again, I'm here if you want me to have a look at some of your charts. I'd be happy to. We are in the tightest space towards the end of this move. So if you do trade the patterns, and if you do, be mindful of two things. First, be sure which way it's going. So make sure that pattern is confirmed by momentum, by your support and resistance. And the second thing is don't use too much money. So use the money. How can I say? It's tricky to trade now. I'm in a short, and I take full responsibility for this short if I get liquidated. I probably will take a loss rather than get liquidated if I see it breaking through. If I see it breaking through this level of support, the red one, I will be seriously considering closing the short. I have to see how it gets to here, because this might only be the third level on the way up. But how can I say? I always trade. I have repeated this to you guys. I always trade the same amount, and I divide it into 6. I don't load in all my 6 parts, because there's no point loading in. I load in responsibly, consciously, when I feel my money has a high probability of success. I don't load in just to have, you know, more money in the game. No, this trading is a very successful way to make money if you are consciously making your choices. You have to be there, fully present and aware of what you're doing every single trade, and make sure you are constantly watching it. If you're doing longer term trades, you have to watch it. That's the price that you have to pay. It's a great way to make money. It's a great way to have a beautiful lifestyle, but you have to watch it, especially in these times. Okay, that's it from me. Have a beautiful evening. And I'll have to check with Roy, because I was supposed to do 2 sessions, Tuesday and Thursday. and I'll check to see if he's gonna do one tomorrow, and I'll do one on Friday. We'll keep you guys posted. And the next one will be about managing your take profit and your stop loss. So it would be about monitoring the trades, because we talked a lot about going in and out of the trade, and now we're talking, we have to go into what happens during a trade. And if you guys get prepared for trading in this time of the market, you will love it in the bull run. You'll find it so simple. It's sometimes you'll be asking yourselves, is it that simple? And it will be that simple, because you've learned to do so many things now when it's the harder time to trade. Okay, super. Have a beautiful evening or day, whatever time it is, and I'll see you next time.